Morning all, how are we doing? Everybody, just want to check everyone can hear me and you can see the stream okay, because I've got MT5 running 10,000 back tests with 90% of my CPU. So I just want to make sure it's actually working this morning, because my PC's been on all night running simulations. So all good, good, excellent. Morning Stevie, morning Ladder, Adrian, David, Seymour, Diamond, Frank. Cool. I've got the opening range breakout EA set up to do another test this morning live, so this should be fun again. So basically I'm testing an aggressive set file for the DAX. No idea if this is going to work or not. Let's see. Only $100 risk per trade, but I'm taking 2 trades at each level, so it's $200 risk per breakout. So we'll see how that goes. Oh, God. My New Year's resolution is to drink 2 litres of water at my desk a day. I've got this whacking great drinks bottle, which is 2 litres. And the other day I went spinning and I felt a bit woozy. So looked it up, and the more water you drink, the more isotopes your body loses, which obviously you need for muscles when you're doing high intensity workouts, which I do. So I bought some of those electrolyte sports drink tablets. Oh, it's like drinking, I don't know, very, very, very diluted juice. Anyway, might have to put 2 of those in. That's going to cost twice as much, isn't it? Right, let's have a quick look. We've got 5 minutes to the open. So today we've got Talking Head Day. Where's my pen? Where is my pen? There it is. So we've got Macklem at 10 and Kuroda. And then this afternoon we've got Powell. Pre-market. Now this is interesting that he's chosen, I don't know whether this is through choice or just fluke, but it's half an hour before the market opens. It's the Riksbank's International Symposium on Central Bank Independence in Sweden. So that's half an hour before market opens. So if he's going to drop any hints as to inflation and potential interest rate changes this afternoon, we need to be aware of that ahead of the market open. So we may have some volatility come off the back of that. It could be a fact that the volatility is false and they move the market to grab liquidity before reversing when the market actually opens. So just keep an eye on that at 2 o'clock. And when the market opens, obviously be aware that any volatility you've seen beforehand isn't necessarily going to be related to anything but what he said, basically. He's going to hammer it down. I hope he's going to pump the US dollar. Yeah, I hope he's going to drop the indices, basically. So, yeah, I want him to come out hawkish, if possible, with any of that. But I don't know. We'll see. So yeah, we'll see what happens there. That's all we've got today. Tomorrow morning early, before we come on, we've got the CPI figures for Australia. So we need to be aware of that as well, the Australian CPI. So inflation figures, obviously, there will have an impact on Aussie movement tomorrow. They're forecast for inflation to be going up. Inflation figures increasing has a short-term positive impact on monetary on the currency, which tends to wane and then move back up again. Reason CPI inflation going up is bad, obviously, for the economy, bad for everything. But the reason CPI has a positive impact short term is because when this figure goes up, it leads to higher interest rates, and higher interest rates do make a massive positive impact. So if that figure comes out higher than expected, we would expect the Aussies to continue to raise their interest rates. If this comes out as expected or lower than expected, we would expect interest rates to start to flatten out and then obviously decline. So this is why we keep an eye on inflation, because it's the key driver for interest. Quick look before the open on where I am. Where am I? Little loss yesterday, nothing. It's 0.18. Most of that was that cock up on the DAX in the morning, but never mind. And not, yeah, no, NASDAQ, DAX, I can't remember, whatever it was. Yeah, it was DAX in the morning, wasn't it? So position wise, I've got Aussie dollar CAD. Let's go out to the hourly. So that's just sitting below break even at the moment. EA is obviously trading this for me, so I've got 3 positions on and in profit at the moment. Aussie New Zealand, that's in profit. I think I've just got the one on that. Yeah, just 1 position on that at the moment. This thing's just not going anywhere since I got in. Literally, I got in on that ADR reversal. We just haven't gone anywhere. So I will be doing something with these today, I think, because obviously we've got the Aussie rate announcement tomorrow. So I need to take some profit on the Aussies. I've got 0.3% I can take with these two, but I'm going to give it the benefit of the doubt and see if we can get some break on this afternoon or today at some point. So we'll see what happens. Euro US dollar I've got 3 positions on that one. One of those I took manually yesterday. The EA then got me into a second. I took one yesterday in New York up here. I'm fairly aggressive on this because this is not the right move. This is the move for the US dollar, and I'm hoping Powell is going to do that today. So as you can see, I've got my TP set there, and that is going to be a runner. TPs are one there, which is at that high in this propulsion gap. Second one is here above this high, and the third one is in this propulsion gap. So this whole move here is worth about 2.5 grand or something. So what we're looking at, 1,300, 800, 500. So yeah, it's about 2.5 grandish roughly, which is 2.5%. And obviously this is a proper valuation, so I'll take 2.5%. And it's a safe. I think it's a safe trade because I got a strong feeling we're going to come and retest this propulsion gap. Whether or not we can get this today with Powell or tomorrow with CPI is obviously going to depend on what Powell says and what CPI figures come out as. I've got no control over it, so we will see. Pound New Zealand I got short. That's in profit, not doing anything at the minute either. Pound US dollar, again, short. Just can't get any movement on this US at the minute. NASDAQ I took yesterday. I put this one in the Telegram group yesterday. So this is the 4-hour level I highlighted. So we pushed down, bounced, pulled back, broke it, eventually retested it, pushed down, retested it, pushed down, limit orders triggered. So this is where I said yesterday limit orders would be triggering. In all likelihood, they did. So I took the M5 actually, reversal alert yesterday, not the 15. Took that one. Actually, it was the retest I took, this one here. That, and then obviously that's sitting there, and obviously nothing's gone anywhere today because New York is not open yet. New Zealand dollar CAD, sitting there, going nowhere. Been sitting in this one for days as well. You can see I got in, got out, got in, got stopped out, got in, got stopped out, got in, still in. It's just not going anywhere. So I'm stuck in that as well. And I've got oil on, and oil is retraced yesterday. I did take one off of oil yesterday. We've got 2 on at the minute. Looking for this low to hold, basically. You see my stops down here. If we get back into this propulsion, if we break basically this low, I'm wrong, so I'm out. But we'll see. So that's me. Market's just opened. There's a 5-minute opening range going in. Morning, Daddypreneur. Good name. Bank robber, demo account. This is a prop account. So 5-minute opening range is going in now. So let's have a quick, how long we got? 2 minutes. Let's have a quick look at the overnights. Sure. Oil related. Limit the discount. Okay, so they're trying to pump oil pricing, which is obviously beneficial for them. CPIs on Japan, same as usual, no difference. It doesn't matter. CPIs are relevant for the yen because they don't put interest rates up, so it just doesn't make any difference. Coming CPI is consistent with the trends seen in the jobs report. The Fed will have to take 25 more seriously. Yeah. Okay. So what? Right. So this is dovish US. So basically, what Bostic is saying is we are expecting the CPI figures to start to come down because unemployment is doing well. Therefore, instead of a 0.5 increase, we should be looking more for a 0.25, which is obviously a slowing of interest rates, which is a little bit more bearish US, but it's still an increase in interest rates, which is still bullish. So it's kind of a mixed bullish, bearish signal, really. I do not see any rate cut through 2024, which is good. All bullish. Consider the natural rate of unemployment to be as low as 3.6 or 3.7, which we are currently at. Must buy a new server from my website. 3.5. So this is the as far as he's concerned, this is where he would expect unemployment to be sitting. So what he's saying is we do not want this going up, which is obviously understandable. Nobody does. Willing to overshoot. Yeah, so that's fine. Rates will have to remain above 5% for an extended period, well into 2024. That's interesting. So he's saying that they're saying they're not going to decrease rates this year, which is obviously what we're all expecting. But he's also saying that well into 2024, we won't be going below 2.5. So it means the decreases will be very small because we're only going to go up to 5.25 to 5.5. I think inflation can fall to about 3% this year. That would take. I think inflation can fall to 3% this year. Wouldn't say that's achievable, but I don't know. Got Daly saying he reckons even unemployment's going to go to 4.5 to 4.6. And then you got Bostic coming out and saying 3.6 and 3.7 is where he sees it. It's like, make your mind up, guys. Anyway, so that's the overnight news, not a lot. Opening ranges are in. So going short above 5-minute high, short below 5-minute high, long above. So we're seeing if we get an inside bar forming here. So looking at where we're going off of the DAX today, obviously the DAX and the FTSE are the two runaways at the minute from the index perspective. So DAX, we've just broken above that high yesterday. We managed to hold it just about. So we had a bit of a bearish end to the day, but we finished bullish. So that's good. So we've got that little bit of a breakout. Obviously, we know we've had a big run up. So we're due a profit take. We're due a pullback move. We've got two levels in here really to have a look at. So we've got that candle there, which is these highs here. So if we're going to continue on a pullback, I would suspect it to get down to there. But we may well just fly out the top again today. The FTSE's made new highs for a long time. So if we look at the FTSE highs, going back here, which is back to February last year, we just broke out day before yesterday and pulled back down again. So the European markets are doing an awful lot better than the US markets. So the US markets are still massively in this bear move. We had a big bear move yesterday on the NASDAQ. We tried to push up, tapped straight into that resistance that I drew on and plummeted back down from it. So that's obviously why I took that NASDAQ short. why I'm short on the NAS at the moment, because of that move. So we've got very big divergence with the US markets and the European markets at the moment. So it's difficult to tell on a day-by-day basis which way either of these is going to go, because obviously they tend to move in tandem when stock sector buying is going on, but it doesn't appear that there's a lot of that happening at the moment, because obviously we're completely out of sync. So we'll see. Just got to play these day by day, but I'm bearish on the US market still. All bearish yesterday, all bearish candles. That's just a retest alert. So we had the reversal alert there. So the market structure is potentially in this propulsion gap now, shorting back down again for a new low. So it looks to me bearish across the board, but obviously UK wise and in Germany, we're looking long. So we've got this level here to be a little bit cautious of coming up on the DAX. So this is a very strong support resistance level here. And that is in this kind of propulsion here. So this whole area here, it's 100 to 150 roughly ADR today. So if we push above yesterday's high today, I'll be looking at sort of if we get to ADR, basically want to start paying attention for shorts. So but at the moment, we've got an inside bar formed on the 5-minute opening range, so we're not going anywhere yet. ADRs today flat, so we've got nothing on the ADRs today. The Asian session was really, really slow. We've got nothing on the weeklies, nothing on the monthlies, so flat as a pancake on the ADRs. RSIs, again, nothing extended. Euro US dollar is the only thing we've got extended on RSI on the 4 hour, and that's embedded at the highs, and obviously I'm short, so just waiting for that to play out. Guys gone bullish again this morning at the open. Really want to see the DAX fly this morning, help this euro down, because the US dollar is certainly not helping it at the moment, is it? So I'm waiting. I want this euro to pump, basically, to help the DAX, but we've got more bearish activity so far this morning on the US. I wouldn't anticipate massive movement on the US in any direction today because of the CPI tomorrow. The market's going to be hanging around waiting for the CPI figures. Sorry, on Thursday. Oh, actually, yeah, no, sorry, we're 2 days ahead, aren't we? So, yeah, we could get some movement today. Like I said yesterday morning, I wouldn't be surprised to see a 2-day push on the US dollar, unfortunately, and then a reversal Thursday. But we'll see how it plays out. We'll have a look at the bias in a minute and the intraday sentiment. It's all still very much the same as yesterday. Everybody's really bullish US, really bearish on the bearish on the everybody's really bullish on the US dollar, bearish everything else at the moment, which obviously we don't want. We want those retail guys on the opposite side of us, ideally. Bit of a slow open this morning. So as you can see with the ORB EA this morning, oh, there we go. See if we can get this break. I've got 2 entries. I'm using a 30% OR stop, and I'm using a 200 pip stop, or 20 point opening range stop. No, I'm not using a. Am I? Hang on. Oh yeah, sorry. I'm using a 20. So there's one stop there, and there's one aggressive stop with a 30% of the opening range. So idea being, I'm going to get these trailers are going to trigger fairly quick. Saying that, did I put them on fairly quick? I put them on 25. So we're going to need basically a move down roughly to TP on the first positions before we start moving stops. This is a variation on the aggressive strategy that I'm testing. And again, I want to live test it to make sure the trades get on. You'll stop out on the first entry. Possibly. We don't appear to have much momentum this morning. Hopefully it's not like yesterday. I mean, remember yesterday morning was just awful. Just had that opening range, and then we sat there literally for 2 hours and did nothing. Beautiful opening range break though yesterday. I caught that yesterday, so we had the opening range break to the high yesterday. Didn't stop. Made quite a few grand on that yesterday. It's lovely. But don't want that again. Rather have it open and done and dusted early. There we go. So stopped out in first position. So second opening range is there. So this is designed basically to, if we break to the downside, add to that position as we push. If this is a false breakout, we're going to get in with a reversal there and add to the reversal on the initial breakout. Too tight, that 30% is too tight. I need the setting in the EA. Oh, I'd just go with 50. It'd just be much easier to just go with 50, wouldn't it? So 50, we'd be looking at one with 15, wouldn't we? Yeah, still be in that position if we had a 15 on it. Testing. I've done so much testing on this strategy. As you can see, lots of testing going on. I'm testing basically. This is the opening. I can't see that. I can't see on my screen because it's too small. There we go. This is the opening range percent, and I've been testing. This is the NASDAQ version of the tests, and these are all 10s, virtually all 10s. Let me just filter it. Let's take the 10s out. Let's start with the 20s. So actually, we start with the 40s. So if you either, with this strategy, because it's so aggressive, you either get in with that 10, you get stopped out, or you get in with that 10, the momentum takes it, and you make a fortune. So and what I'm looking for is something in between. So I'm looking at testing the opening ranges. So 40% of the opening range to 50% of the opening range seems to come up the vast majority of the time. All of these set files over a year are making somewhere between $250,000 to $500,000 off of a 100K account, with around about a 2 to 5% drawdown. So these are all really good, but they're all using TPs. So we're not going for runners. This isn't a runner strategy. This is a fast in, fast out scalp done in an hour sort of thing. So I'm basically testing this live on the DAX because NASDAQ, as you saw yesterday when I traded the NASDAQ, worked beautifully yesterday, didn't it? After we ironed out the bugs. So yeah, it looks like a really good strategy, but I want to test it on the DAX because the DAX is obviously an awful lot slower, and what I'm worried about is the same sort of thing we had yesterday, where we go into that after the open, and hopefully, depending on the opening range sizes, this should kind of circumvent that a little bit, I think, but we'll see. We're not going anywhere on the DAX, are we? So I'm going to just have a quick look at what everything else is doing. Pound US dollar, sideways at the minute. So not going anywhere in New York. Euro US dollars pushed up, coming back up to the Asian high. The Aussie's doing. Aussie's hovering. Aussie New Zealand's coming down, which is nice. New Zealand's not doing much. Breaking out to the downside again. Or trying to anyway. See, I don't want to break out to the downside. What I really want is this thing to just go mental to the upside, because that's going to bring the euro down. But the euro's going up. It's going up. New Zealand CAD's just pushing. Might be Canadian weakness. No, that's good. Okay, so US dollars hitting, US dollar Swiss is coming down into some kind of support. It's just low here, it's just retesting. Right, we'll let all that play out. So nothing's changed fundamentally yesterday much, obviously because we didn't have any news or anything. So buys and sells today are pretty much the same as yesterday. There's not really been any sentiment change either. So looking at the intraday sentiment, there's nothing changing much here. The market is still positioned, everybody is still positioned the same as they were for non-farm and off the back of non-farm. So these have been fluctuating between 80 to sort of 87%. This has been fluctuating between 70 to 79%. Everything has been literally fluctuating, but nobody's had any direction change, obviously, because we haven't had any direction change yet. So as the US dollar non-farm payroll played out yesterday, all we did was continue that move. So everybody that had a bias in that direction is either stopped out and re-entered, stopped out and re-entered, and in that bias now, waiting. Either they're going to get stopped out and re-enter today, but eventually when they give up, or the actual move happens and the market pays out, then that bias will start to change. So, you know, retail traders are stubborn. They will keep catching that falling knife until they have got no hands and fingers left. And then all of a sudden they will go the other way, in which case then the market will come back and take them out. So we're just waiting at the moment, and we need a catalyst. And that catalyst is obviously going to come with potentially either Powell or the CPI figures on Thursday. So tricky to know what we're going to do today, being a Tuesday. So looking at these, Aussie New Zealand and Aussie US, we've got no RSIs obviously to look at. So we're just going to go through the sentiment again. Aussie New Zealand, I am already in short. Really want this low to get broken. So it's yesterday's low basically is a broker candle, because it's New Zealand dollar. You get a wide spread at the swap. So I would take that out of the equation. This is the low, obviously, here. So if we do break yesterday's low, we've got then, as soon as we've broken that low, we're running straight into a propulsion gap on that breakout. So this is why this is just a scalp for me. It's a $200 profit. It's a tiny little move, but that's all I'm going to really go for on this. I think this could obviously go a lot further. If you look at it on a higher time frame, yeah, we are just pulling back into the 72 moving average. We're accumulating nicely here. The danger is we come back, entice the shorts in, and then run for the hills. Obviously, the main catalyst we've got is the news tomorrow. So it's going to really hinge on what the CPI figures are for the Australian dollar. That's either going to power it up or not. But it's a big sell at the moment. We've got COT on our side. Retail's not interested, but everything fundamentally is fairly balanced if you look at it. So interest rates are favouring New Zealand dollar. Interest rate change is favouring the Aussie. Inflation is changing, is after New Zealand. That's for the Aussie, for New Zealand, sort of intermediate there, and New Zealand. So there's a slight bias for New Zealand dollar. The main reason this is a short is because the market is positioned that way. But that can change tomorrow with inflation. So I still like it as a short. And I think it's just a pullback on this move. And I think we're going to continue that way. You know, we've had a very lovely run, haven't we, on this? We made a lot of money out of this last year. I did. And it undid the whole lot virtually within 2 months. So a steep drop like that can't just suddenly stop. It can go into an accumulation, but I can't see it suddenly going, oh, I didn't mean it. There's nothing fundamentally shifted yet that should push the Aussie back in the New Zealand in favour against New Zealand. So yeah, I'm in short on that already. If you're not in on it, you could take a breakout of this level here, but obviously when you get down into this propulsion gap, I'd probably try and cover it with a break-even stop. You'd probably get broken even, because look at this beautiful support. Yeah, that's gagging to be a resistance, isn't it? So this is why I'm just sort of in out there. And if it pushes back up into that, that's where I'd look to go short. So the move for me would be down into here, which is that we got that support level there, over there somewhere. Should show it really. It makes sense then. We got this support level in the propulsion gap. That is where I'd be looking for an M5 reversal alert. So drop down to M5 once we've broken this level, and then take a reversal alert there. Assuming market structure is going to go peak, formation high, put a low. Could come all the way back up into here, of course. But that's such a strong level. If we break this level, I think we've got a really good chance of dropping fairly quickly. So that's the Aussie New Zealand. We've got the Aussie US as well. Again, bias on this one is obviously, as you can see, it's a sell. It's the US dollar. We haven't got any US dollar strength at the moment, but this is a beautiful potential liquidity run. So we got the reversal alert above the high yesterday. A liquidity run on higher time frames tends to be anything up to half an ADR, quarter to and half an ADR. So this move yesterday on 4 hour was 56 pips. It's a 98 pip ADR. So that's half an ADR. So a liquidity run on the 4 hour chart, I tend to find, if they are going to do that, is up to half an ADR, because the bigger players, the swing traders, do not put their stops at the high. They put their stops sensibly above the high. So they run the liquidity until they go, right, well, there's no more limits up here, so let's drop it now. And that's why you get larger moves out the top on higher time frames. Lower time frames, we get a lot of double tops, because double tops, including spread, equals a liquidity run. Yeah, so this needs to break back down. And obviously, this is reliant virtually on all of this. So we're looking for this US dollar movement. Ladder, insane chop at the open today. Yep, massive, hideous chop. Look at that outside bar just gone in. Death by chop. Nothing you can do on days like this. Opening range breakouts will not work if there is no breakout. It's a breakout strategy. These are the days you want to be running mean reversion. Short in the double tops, long in the double bottoms. Unfortunately, you don't know that until the double bottoms and the double tops are in place. So this is the problem. This is the problem with trading, isn't it? If we knew today was going to be choppy, all we would do is do that. If we knew a day was going to be a breakout, we would just go in and do that. If you want to be super effective and efficient in the market, you will run a mean reversion strategy at the same place you run a trend breakout strategy. And as long as you've got a positive risk reward on those, and the strategy lets you go without double stopping you, you'll win. But it doesn't work either. Long-term edge, you're going to lose. We won massively yesterday in the DAX, didn't we? Caught that yesterday. Well, as much of that as you took. I took some of it, I took off there, some of it I took off here. Didn't get all of it, nowhere near. But them's the breaks, as they say. This is what I'm looking, this is what I want. If I lose this morning and it does that and I get back to break even here, I'll be happy as Larry, because it means the euro is coming down. And if the euro is coming down, it means the pound's coming down. And if those are both coming down, they're coming down against the US, which means that those positions are going to go into profit. And that's where I've got most of my leverage at the moment, short pound US dollar and short euro US dollar. So I would welcome being stopped out on my shorts today to go long, personally. We will see. This is why I'm testing this with low risk, because this is aggressive. And your aggressive strategies with the tight stops are the ones that get killed the most in this sort of condition. Aggressive tight stop strategies when you get a 3-bar break. Done. Literally 15 minutes, 3 grand in the bank, walk away, not working anymore today. That's what the ORB is all about. clues in the name, opening range break. If there is no opening range break, it doesn't work. We will see. It's choppy as out. Look at it, it's awful. So we've got 3 opening ranges. There's our hideous opening range 3, which is the 20 to 25 minute candle. So whichever way this goes now, I'm going 6 positions. Assuming it goes, otherwise I'm just going to hit max loss and get out. Hope I don't hit max loss because I've actually just realised I've got that set to $4.5 grand. I'll be hard pushed to get that because it's only risking $300 a break. So we're going to need a lot of failed breakouts today to get out of a max stop. Got to look at that gap. This is highly illiquid this morning, this market. This is why we're getting this movement. There's a lot of large orders going in, but it doesn't look like there's a lot of liquidity in the market this morning. Just getting pushed around, look, gapping. Anyway, so Aussie US, like that as a short. Again, obviously the non-farm payroll propulsion gap is the target on that one. Initially, Swiss yen, so all the yens, Swiss yen, Euro yen, New Zealand yen, US yen, they're all down as buys. Personally, I disagree with my own sentiment on the website. I want to be shorting all the yens because of the COT positioning mainly. If you look at the COT positioning on the yen, they're all short it. And as we can't take fundamentals into account to do with inflation and interest rates, the only thing we can use is GDP and unemployment with the yen because the Japanese don't increase their interest rates. We have to go really more with what the large player fundamentals are. So with the yen pairs, I would pay more attention to the intraday sentiment on here and look for anything that is basically a decent long or short yen based. So you've got Euro yen at the moment. That COT, is that right? Oh yeah, because we're 70%. That calculation doesn't look right to me. Hold on a minute. Yeah, no, that's right. So yeah, sorry, a bit of charts. So yeah, so the yens, I just really don't fancy the longs basically on it at the moment. The one thing that worries me about all these yens is the intervention side of things. So we've got this issue with intervention that keeps coming in. We keep getting these big, strong moves to the downside. When these happen, I want to be short. I don't want to be caught on a long trade. So I just want to find levels where we can get moves to the downside. And I'm looking for logical areas. And at the moment with these yens, the only real thing is this high here. And we've had that area, if you look at all the yen pairs. That area there, so we've beaten it on the Aussie yen, we pushed up into there. This is where I said yesterday we'd be looking for some kind of reaction in that accumulation there. Oh God, look at this today, it's awful. Some kind of reaction in there, which we got. The CAD yen, same thing, this level here, we've got waiting for it to get up to there. So if we get an ADR hit on that, that's potential nice looking short. Got the Swiss yen, again, got to go all the way up to there. You know, most of these pairs are not able to get there. They're not managing to make it up to these levels. So we're basically just waiting for the next push on the yen. We've got Kuroda speaking at 10 o'clock this morning, so that could well divvy it up a little bit. But we just have to wait and see basically what happens with it. But I just really can't bring myself to long it. So I'm looking for the pairs which have got short bias basically. And the ones that have got long biases, I'm not really interested in. So anything that gets to a double top, I'm not really getting involved in the yen at the moment, but anything that gets to a double top potential, you've got an opportunity there. So a little bit like the Aussie did. It came up to the double top, got that lovely little reaction there. Second time it didn't work, and then we came up into the accumulation, got the reaction there. So that's the sort of thing I'll be looking for. US dollar yen, even though I want the US dollar to rally, if the US dollar starts to rally against the yen will just intervene and push it back down again, which is what they've been doing since we got to $150. So again, same thing with that. I just want to look for short opportunities. Euro pound. So with the euros, we've got euro pound as a buy. So euro pound, basically, we've just sat in accumulation since before Christmas, and we haven't gone anywhere yet. We tapped into the lows very nicely this week, and we've bounced out. So at the moment, obviously, the euro Lagarde is talking it up a lot. So I'll be looking for long opportunities on that one. We've had no RSI extensions that we can get into. We almost did here. That may have signaled. It's touch and go, isn't it? But last actual entry signal we had was down there, which that one played out beautifully. Yesterday, we had the option to go long down here. I don't know if anybody took this one yesterday, but this is the low ADR euro pair. So, yeah, not great. Morning, Kenny. So I like that one as a long, but at the moment we're not going anywhere. So it's literally taking the range lows. So every time we get down to this area, so yesterday was the trade on this one. I didn't get any signals on ADR, didn't get any signals on RSI, so just didn't get in it. So that's a nice looking long if you can get an opportunity to get long in it. The Euro New Zealand and Euro US dollar are both shorts. Euro New Zealand. So we got this propulsion gap we're coming up into on Euro New Zealand. We've missed it. So that one coming down. We didn't get back up into that propulsion gap. We made a 50%. Well, actually, it's more than that. It's probably a 61.8 retracement on that. By the looks of things. Yeah, 61.8. We didn't get up into the propulsion gap. That would have been my ideal entry short on this one. If you want to get in short on it, though, right now, we are just breaking out of the Asian range. So your reversal alert this morning was up there on the 15-minute, just before London Open. Retest was during London Open. Now we're off. We're just breaking this low. So if we pull back from this low now into this propulsion gap and into the highs of this support rectangle, pending order under that low, jump in short. Looks good. And Euro US dollar, I'm short already. Just waiting for it to do something. It's not doing anything. So we broke out the highs. If this is a liquidity run, we've run it. We thought we were going to run that liquidity. We initially, on non-farm payroll, thought we were going to run that liquidity, and hell, that didn't happen, did it? So they have taken everything from before Christmas now. There is nobody left short, apart from anybody that has entered short during non-farm payroll or after non-farm payroll. So the market is poised, ready now for this US dollar strength. We just need it to come through. So we really need Powell to come out this afternoon and not say anything dovish. I don't care if he doesn't say anything bullish about the dollar, as long as he doesn't talk it down. That's the danger. So what I'm hoping is he's going to run over what happened in non-farm payroll. And, every now and again they drop that. We're not quite sure why the market's reacting so negatively. We've never said insert hawkish comment here. And then all of a sudden that power starts up. And if we get positive CPI off the back of it, fantastic. Off we go. So it's just a waiting game with this US at the moment. And I just don't think the markets are going to want to make a move until we've got the CPI figures, unfortunately. But they can certainly make a start and just at least get me some profit on it. Selfish. They're just selfish. Oh my God, look at this DAX this morning. Hideous. Just can't make his mind up, can it? So where we are right now, this candle. So if you look at what we've had from a market structure perspective, oops, wrong one. So we've got our opening range. We then went inside bar. Then we went a double top, new low. Then we went inside bar. Then we went outside bar. Then we went inside bar. Then we went outside bar. Now we're going lower low. So overall, if you average all that up, are you following? We're bearish. But just utter mess. Inside bar followed. I mean, this is typical nuts. Inside bar followed by outside bar, followed by inside bar, followed by outside bar, followed by inside bar, followed by outside bar means the market is just completely clueless. Hasn't got a clue, is it, today? There is no sentimental purchasing at the moment. And this is what we had yesterday after the initial move. At least yesterday it gave us a 3-bar move. Germany 30 doing ping pong, yeah. What we need is, you know, when you're watching those ping pong table tennis matches in the Japanese, who are unbelievable with their accuracy and where they put the ball. What we need is, you know, when one of them does one of those super hard smashes and it comes off the very corner of the table and then pings off into the audience because they hit it so hard and it takes somebody's eye out. That's what we need. We need somebody, one of the big 10 market participants now to go, right, here we go, smash. At the moment, nobody's interested. I'm not even long or short, look. So there's my long positions. There's my shorts. So I'm basically trading. I need an outside bar break, basically. What a mess. Hideous. Euro US dollar. At least Euro US dollar has taken out those highs. So if we're going to pull back from an Asian stop run to the high and target these lows, at least we get a breakout to the upside. But this thing can't make its mind up, you know. And this is where you see it's all interlinked. Yeah, look at the indecision on the Euro US dollar at the moment. Yeah, initial move, indecision, outside bar, indecision. So we've got an outside bar spinning top going in at the moment. It's just, there is nothing in the market today, no movement. What can you do? Can't make money if the market doesn't move. So where was I? Euros. So yeah, Euro New Zealand, Euro US dollar, waiting for the move. The pounds, pound New Zealand, pound US, looking for shorts on those. So pound New Zealand, I am short already. In profit on that, again, just not going anywhere. Stop is literally all I'm doing is asking for a low. I'm not getting greedy. I just would like the market to do something. It's just not doing anything at the moment. Pound US dollar, same thing. So yesterday, pound US dollar, I got stopped out on a few positions. I got stopped out on, one yesterday I got stopped out on. Put that one back on at the highs as we got a reversal alert up there. So M5, I think I took. Yeah, it was an M5 reversal alert, but oh no, I didn't. I just got in on that one. So I just took another position basically up at those highs just to replace that one. Because I think did we get an ADR on this yesterday? I can't remember. Yeah, we were virtually 10 pips, 5 pips away from ADR. So that's why I got the second position on. So yeah, just waiting again for this to actually start its move. New Zealand CAD, US CAD. So New Zealand CAD, I've got the long on at the minute. Again, we looked at this one already because it's just not going anywhere. Nothing is broken yet. It's like New Year has started and they've gone, actually, we'll start in February. not going anywhere, are we, with anything? It's just scalper's paradise, basically. You need to be in and out with 0.5% at a time at the moment, and just keep putting them back on, I think. You don't know this until, obviously, it's happened. So US dollar CAD, again, that looks like a nice one. So just coming back down, potentially into support. So looking for longs, yeah. US dollar CAD is a long. Oil isn't doing very well. So we should be getting up with momentum. All the positive news on the US dollar. We're just, again, waiting for Powell, hopefully. Look at these tails there. I mean, they're really, really, really stepping on every buy rally that we get at the moment. They're not interested in letting this thing go higher, run higher at the moment. So support rectangles holding very nicely at the minute. Got that propulsion gap on the end of the New York move that happened in Asia yesterday. So we've got to slam through that. But once we slam through that, yeah, we've got a couple of resistance levels up at ADR. So the move should be really up to ADR initially, and then back up into that propulsion. But you know what Powell's like. We could get that today very easily. Inside bar. Jesus, look at it. Another inside bar. This thing's not going anywhere today, guys. Just got to be patient. Whenever you get days like this, you have to go back and look at other days. What I used to have, actually, which is, you might want to do this. It's really a really handy thing. When I first started trading stocks, I was trading the M5 charts at the New York Open, predominantly focusing on Nvidia and a couple of other stocks, but mainly on Nvidia and the Nasdaq, the QQQs, things like that. But what I did was I looked at the most common scenarios that you see. So looking at yesterday on the DAX. So this we had here accumulation. This is what in that particular group we used to call an accumulation fade. So what we were expecting to happen was a trend day based on earnings or based on something else that had happened in a stock sector or whatever it was. We would be expecting a big day rather than a rotation-based day. So what we would do is we would expect a fade, and we would look at some days on fades, you get this accumulation fade. So what I did was I printed out the most common things that we see happening. And there's really only three things you see happening on most days. You see an initial break happen and go straight into a trend. You see a false breakout happen and then a rotation back to the other side as a trend. Or you see a whipsaw, basically, like that. But even on these days, what you see is at some point, and usually the next session, which is why we were expecting a trend session on that particular day, for example, because we had a rotation day the previous day, and after a rotation day, you tend to get a range breakout day. So that is basically what I did. So I printed this off. So whenever you get into days like this, where you're sitting here going, oh my God, this thing is just driving me nuts, you can go, well, yeah, we know what happens after it drives you nuts, doesn't it? It then makes you a load of money. So it just gives you that, right, it's not happening now, but what were we expecting to happen when the range breakout does go? What is the market doing here? It's accumulating orders so that it's got a book balanced either long or short. When we've got a book balanced long or short, what does the market do? Drive hard in one direction to get its profit. So we know which way we don't know which way it's going to go, but this is very typical of what we saw yesterday. So we just got to sit there and be quiet and wait and get that breakout when it comes. The thing is, you've just got to survive. And that's what part of finding the strategy that works best for you is. The tighter you are, the bigger the returns are going to be, but the more stop outs you're going to get. So can you survive 1,000 cuts to get that one big win? Or do you want to have only one or two trades taken and take a smaller win when you get that, but you won't get stopped out as much? And that's basically all dependent on stop placement, where you put your stop. Because on days like this, if we rotate back up into there now, it takes another loss. Nothing you can do. But if you put your stop at the opposite end of range, you won't get stopped out as much. Today you would have got killed anyway, regardless. But this move here is what? It's like being in class, isn't it? Anybody paying attention in the last few months? Double-ended stop hunt, basically. So all they've done is they've put in the opening cash balance. Everybody has now tried to pick a direction. Regardless of the direction they picked, they would have had their stops at the opening cash balance highs and lows. They've taken all of that liquidity and now given everybody another choice as to where you want to go. So if you decided now to go for the long breakout, that's your target because that's where your liquidity stop is. Or they are going long and that was your hint to go long. We don't know. We don't know whether the buyers or the sellers are in control at the moment, do we? So that's those covered. Oil is the other thing I want to have a look at because I'm in it at the minute. Yesterday I took one off expecting a pullback push. And this is what I find the most frustrating thing about oil. It teases you. This is what it's been doing since I've been trading. And I've only been trading, I think, since August last year, wasn't it? I started oil. It looks like it's going. And then it says no. So you get these, right, okay, yeah, we've broken structures to the highs. Oh, no, sorry, I meant to low. And the market structure on oil, regardless of whether it's bearish or bullish, we tend to get a lot of market structure breaks, which are false. So this one here, yeah, we're like, yes, no. And then you've broken that low again. And it's like, well, make your mind up. And it goes into these kind of expanded sort of ranges. You know, and I wouldn't be surprised if it came back down and sort of tried to test $60 a barrel or something ridiculous. But the current structure from here and our target at 107 this year would indicate we were bullish. That's what we didn't get. So taking it back out to bigger structure, that is what we would look at if we are bullish market structure now, hence me being long down here. But if this comes back down and invalidates these lows, I would have to say we're probably going to come and have a run on these lows here. So it's an infuriating thing to trade at the moment. And the fundamentals don't seem to make any difference to it at all, do they? As we know. So we will see. So we're at the lows. So, right. So we've got some progress. Finally. Inside bar. Lower high, lower low. Lower high, lower low. Spinning top. We've got 3 minutes left on this candle, so we can't class this as a lower high and a lower low yet because we haven't closed the candle. But we are starting, finally, to get some bullish price action, which isn't what I want because I want the euro to drop. But anyway, I'll take what I get. So I'm too short at the moment. I think what I'm also going to do is adjust my stops, my TPs on these. I'm not going to go for the 3-to-1s. Let's have a quick look at where we could possibly go on the DAX. So I'll leave one there. Yesterday's low and a runner. I depending on obviously what Powell does, he will affect the all the indices at the same time because anybody that's trading the Nasdaq or the US indices on Powell will affects the DAX as well. But that's what I'll go for today, I think. So that's 1, isn't it? 25. Okay, so roughly here is where we're going to start triggering trailing stops. The way I've got it set up at the moment, anyway. That's the situations the continuous mode was made for. Exactly, Ladder, yeah. That's why I put the continuous mode in there for this exact situation. So the continuous mode is a double-edged sword. It means you are going to you're going to get in, you're going to get stopped, you're going to get in, you're going to get stopped, you're going to get in, and you're going to continuously get stopped out during these ranges, dependent on where your opening ranges are set, where your TPs and your stops are set, rather. You are going to get continuously stopped out. But it means that when you get the break, you're on it. So part of, I'm a big advocate for not using automation 100% automated. I'm a big advocate for using EAs with partial automation. So let the thing get you into your strategy, but you are the trader. I'm watching this now thinking, right, if we are going to break to the downside, I've now got a little bit of a loss to recover. So what I'm going to want to do is adjust my TPs. So I can see that the market is not very strong today at the moment, but if it is going to strengthen up, I need to make sure that I milk it. So I'm not going to take a 3-to-1 reward on all of these positions. So, adjust it as you see it unfolding. Hence me moving things around, because what I'm looking for here is that low to break and hold. If that happens, then we've got a good chance, because obviously that's going to paint an outside bar. We've only got 4 minutes. It's not going to get that low in 4 minutes. I don't know. You never know. Anything can happen. But this candle's got to be a mother of all candles, isn't it, basically? So I'm visualizing basically where we're going now. So what we've had so far at the open is a rejection of the highs. And we've now broken back inside that bar. So my next candlestick that I'm envisaging is going to break that low. Yeah. So if that happens, I'm fine. Yeah. If it doesn't happen, I want to be stopped out on all of these positions. Which means I want it to get down to somewhere around here to kick those trailers in, those break-even stops in, so that we break back up. So break-even stops I've got set to 100. So when I'm 10 pips in profit on these positions, they'll be stopping out of break-even anyway. So basically this is either going to go, or I'm going to stop out on some of them and maybe take a little bit more of a loss on some of them. But that's why I put the continuation mode in there, because what I was finding was these days like this, days like yesterday, are a prime example of what I observed when I was doing the visual back testing on the strategy. You miss that. You miss the opening range high and low. In this case, on this particular day, I would have got in on that. But on a lot of days, you'll find you'll get that sort of double end whipsaw or something like that, or something like that. Yeah, whatever it is, but it will trigger both. And the problem with that is once it's triggered both and stopped out, or made a little profit, or made a break even, or done whatever it's done, that's it. There's no more trading today. And I would see it over and over again. It actually breaks towards end of London, or it breaks in New York, and that's what you lose. You lose the runner, and that more. And we saw it yesterday, didn't we? I lost an amount yesterday morning and made way more yesterday afternoon, all on the DAX, because the breakout actually happened way later than the opening range. And those are the things you can't control. When the market's going to go is not something you get to choose. Be nice, wouldn't it? So stops are triggering in now. You see the trailers are kicking in here. So I'm just reducing risk on all positions in case this is a false breakout. All right, so we've got 1 minute till candle close on the hour. That's exactly what I did today. EA got me in and then I intervened based on what I was seeing on the chart. Yeah, perfect, Jarman. That's it. You're a trader. You're not an EA operator. If you want to be a machine operator, there's plenty of jobs like that. Because basically that's all EA is part of a machine. So stops to break even on, where are we? Opening range 1. Opening range, not quite. Cancel the buy stop to avoid getting hedged. Yeah, that's something I need to pay a little bit more attention to, because this is the second time in the last couple of weeks I've actually managed to get hedged. But I've only got hedged because on the previous time I got hedged was because I didn't have an offset. And what we got was exactly the same as we got here, which was a double bottom. So I hedged on the double bottom. So the offset should stop the hedging. But, I mean, there's nothing you can do about that. That's a blatant double-ended stop hunt. You can't do anything about this. Haven't tried the ORB live yet. On taking the order, does it take market orders limits and wait for a 1-tick pullback to cover the spread? No, it just basically trades on pending orders, as you can see. So it places pending orders at an offset outside of the opening range. So that is opening range 3 that I have set. You see my pending orders are set here and here, which is a 1.5 offset, or 15-point offset, 15 pipette offset, really. So it uses pending orders. So we'll let that run. See if we can get the run today now. So Asian low is coming up. Oh, sorry, pre-market really, if you like, low. It's coming up at 147.08. So somewhere, it's basically this low really is what we're potentially going to run into problems at. So I've got stops here. So again, you know, this is I've got this set on aggressive and tight. So high probability I might get stopped out on some of these. The offsets, by the way, the break-evens are offset by the same amount as pending orders, so that covers your spread. Is that what you mean? Is that what you meant? So no, but so the break-even basically, the break-even stop setting will offset as well, so it locks in. Some brokers, obviously, and if you're trading on some prop firms like EA, E8 allow EAs with no problem. They have commission, so on my E8 accounts, I need to try and grab the commission back, or at least some of the commission. You're never going to grab it all back because it depends on the size of the lot you're taking. But so we're putting a propulsion gap in here. I really must put the WRB on this. I never put the WRB on this. It's not a template. I just open a chart. So we're just coming down towards these lows. So this will... actually, I'm not sure that is a WRB because it's not... That candle is actually smaller than the preceding candle. So that gap is likely to get retested, which means I'll get out of this these lows here, but these will hopefully still be on. Yes, also, do I need to subtract the spread from each trade? No, because in the backtester, you set the spread. You either use current spread, or I use 2, because if you look at my spread that I trade with here, you can't see it because there isn't. The spread is virtually non-existent in the DAX. So if you look at my DAX spread, it's 1. It's always 1. So I test everything in the backtester. Personally, I test it with a 2 spread, because what it does is it means it covers the spread, and it also gives me 1 pip of slippage. So whatever I get is basically worst case scenario, if you like. Okay, so there's the low going. So we're triggering pendings down here. So we'll see if we've got more pending orders than we have sellers, or whether or not they've got the power to gobble that lot. Apple Scab. Good name. Ain't a low float, it's a scam. Okay, it's cryptic. Ain't a low float, it's a scam. I'm going to have to explain that one. I don't think anybody in the room understands what that one means. Again, days like this, the what if scenario, we've got 5, 10, 15, 20, 25, 30. If you'd have taken the 30-minute opening range break only, you would have had 1 stop out, 1 entry. You know, what do you take? The 5, the 10, the 15, the 30, the 25? There's no right or wrong. One of them's going to break. I just don't know which it's going to be. Okay, so the pending limit orders have just triggered at the lows. So let's see what they make of that. Next level, yeah, I mean, next level really is down here. But yesterday's levels are really the most important. So from yesterday, we've got nothing really until we get all the way down to yesterday's low, obviously, which is down here. So we're either going to head down there, or we're going to head up for yesterday's high. Yeah. Think about whenever you're trading intraday, you have to think about the 3 scenarios you're going to get. So yesterday's candle, there's only 3 things that can possibly happen on a day, and this is all explained in the blog post about the opening range breakout EA. You can either have an inside bar, you can have an outside bar, or you can have a trend bar. Yeah. So those are obviously just one thing: a trend, an outside bar, or an inside bar. Yeah. So those are the only 3 things that can happen. So when you're looking at intraday movement, you have to look at where yesterday was, yeah, and think, right, what are we going to do today? We don't know. No one in the universe at the moment, right now, in this specific moment, knows whether we're going to put in an inside bar, an outside bar, or we're going to go for trend. So you have to think of all the scenarios. If we're going to go inside bar, what we're going to do? Have a rotation day. If we're going to go outside bar, what are we going to need to do? We're going to need to go trend, reversal, and have a massive move in the middle. So either we're going to play a double bottom bounce or a double top bounce. if we think we're going to have an outside bar. Or we're going to get a trend day, which means that we're never going to touch these highs, and we're literally going to go with a lower high, and we're going to put in a lower low, which means we're going to get a trend day. So those are the only things that can happen. There's only 3 scenarios. So we just need to think intraday, which do we think is going to play out? If we get down to here, which is pre-market movement, which is not real trading, and it bounces, it's more than likely just going to be a pullback, because this is not real movement. This is the low, that is the high, and there was nothing in between it. So today, I'm 90% sure we're going to test one of those. What I don't know is whether this is going to do that or that. And that's your job, to decide long or short. You don't know. And that's the premise of the opening range breakout, is it goes the way the market goes. So at the moment, I'm seeing limit order triggers, which means we've got buyers on the side. I don't know whether there's more sellers or buyers at the moment. These propulsion gaps will tell me. Because when we get into these, if they add to their positions, I know we've got sellers on the side. We may have to get up to there to add to positions. I have no idea. But you won't know until you get there. So you just got to, this is, as the trade unfolds, this is how I manage trades. I'm looking basically for limit order triggers. Right, we know there's a load of buyers in the market now. Have we got enough to overpower them? So these guys are now entering buy orders after buy orders after buy orders, trying to push the market up. They will have exits set there. So if the sellers can overpower the buyers and the buyers cannot get above that level, the buyers will go, right, we're out, and they will start to exit their positions, become sellers, and drive the market back down to take out the people that didn't exit their positions and become sellers to take the market back down. They will puke and drive the market lower. That's basically what happens at lows. That's the mechanics. What we need to do is just watch the mechanics unfolding, watch what's happening. And if you've missed this, your opportunities are either to take a sell there or a sell there, if you are assuming that these guys have got enough power to drive down to attempt a trend day or an outside bar. Those are your mechanics. Hi, have you done a video on hybrids drawdown control? No. Hybrid drawdown control is basically just using a stop, but a very wide stop. So with position trading, all I'm doing with my position trading is normally, as you know, just taking pound US dollar, because I've got, actually the best one to take is Aussie CAD. Whoops. So as you know, with the position trading strategy, I get in and I add to my positions to average in, which obviously gets me back into profit. So, I was wrong there. I was wrong there. I was right at the moment there. And now I'm in profit on all 3 of these. So this is my position, position trading. Normally what I would do is, if it continues to push against me, I will keep getting in until I can get out. And I can get out now. But with the hybrid strategy, what I'm doing, all I'm doing is, instead of doing partial drawdown control, I'm using stops, which is 2 ADR away. So it's 0.25% of my account risk per wrong position. But the difference with what I'm trying on this account and normal position trading, my normal position trading account is my own money, so I can do what the hell I like. With a prop account, you have a daily drawdown limit. So the difference between what I'm doing in this account and my normal account is I'm using this to control my daily drawdown limit. That's why. So I'm just using 2 ADR. If the price moves against me by 2 ADR, I'm quite wrong. If it moves by 3 ADR, I'm really wrong. So I might as well get out of 2 ADR. But what I can do is add back on. And that's exactly what I've been doing with the pound US dollar. I've been getting into aggressive on this, admittedly, but basically, I'm just getting in. And if I get stopped out like I did there on whichever position that was, that one there, these were set at 1 ADR. But if I get stopped out, I add it back on. So for every loss we take, we add on to bring the average back up. And then when that move starts back down into that propulsion gap, we've got 3 positions short, which will pay me, I don't know. There's only 1 TP there. It's because I'm sure this is coming down, so I'm letting a runner go. But the losses that I've made on this so far is $750. This one position alone is $500. So that's 2/3 of my losses back on that one position. And then these two, I could get out there and walk away and not lose anything. But I'm looking to get a runner. I'm looking to get that big move. And that's, I think, the way to play prop with position trading. And this is what I've been thinking about a lot over Christmas. You know, I'm right. When I'm in line with fundamentals, I'm usually right on direction. It's the timing you can't get wrong, obviously. So the idea being is I'm willing to take small losses. And, you know, when an account, you've got $4.5 grand a day you can draw down by, I've got to keep on top of that, which means I've got to continuously do drawdown control. I would normally do drawdown control when I've got profit in the bank. But starting a prop account, you don't have profit in the bank. So you have to think of a different way to do drawdown control. So this is kind of just a variation of it. It's the same thing as the position trading. I'm going to have to be patient. I'm going to have to wait for these positions to happen. And yeah, I'm going to take lots of little losses along the way. But there's nothing I can do about that. You just have to take those little losses. But when these mature, yeah, that will easily be a 1% win. That'll be a 0.5% win. That one will probably go to a 1% win. That one will be a 1 to 2% win. Yeah, do the maths on it. I'm going to pass it within a week, 10 days. So I've got to do 8%. Assuming I get the positions right and I'm getting in at the time when the market is actually going to go my way. I don't know that. And this is the problem with position trading prop. And this is the problem I had last time. I did a proper valuation position trading before Christmas. Well, actually, it was in summer, I think it was, I did it. And I got to within $1,000 of target. I had a position on and I took another position and both of them squeezed at the same time. Normally, I'd sit through it. I did before Christmas. You can sit through squeezes, not a problem, as long as you're not massively over leveraged. But on a prop account, you can't sit through squeezes because you've got a daily loss limit. That's the thing that screws you. So that the idea of the hybrid is just to keep on top of the daily and keep that down, which also means I've got to limit my exposure. And I'm really overexposed at the moment, as you can see. But it's because I'm getting aggressive because I want to get into some profit, basically. But yeah, difficult. It's very difficult. But you know, losing. I'm risking 0.25% per position. So worst case scenario, I'm only ever going to get something go really to $200, $300, and then it goes over here. So if I have 10 positions a day that hit stops, I'm only going to lose 3%. I've got 4.5% a day I can lose. So it's all calculated to stay within those limits. Apart from things like the Euro US dollar, which I've got a little bit over aggressive on. But that's because I'm seeing an opportunity ahead of Powell, which is why I've got in aggressive. But the stops on these are bigger. These are 1%. Oh, that's a 0.5%. That's a 1%. And that is a 1%. So there's 2.5% loss there. So I really need Powell this afternoon. DAX is got a bit of. So there you go. There's the propulsion gap. So that explains the propulsion gap to the T. But buyers who had their limit orders here triggered their limit orders, tried to add to their positions. Sellers added to their shorts. We had more sellers adding to shorts than buyers adding to longs. Bear candle. Buyers are now trying to rally again. So the sellers have pushed down. Buyers are trying to rally. Buyers have not managed to make a new high. Sellers are adding to their positions in the propulsion gap. What we're looking for now is the guys that tried to push here, who had stops here, are liquidated. The guys that started this move here, all their stops are sitting there. So when we get to there, what we'll see is a pop at the bottom as all that liquidity is grabbed, all those stops fire, and they all become sellers. So everybody that's a buyer here, if we break that low, will become a seller because they have to get out, and to get out of a buy, you have to be a sell. That pops. So we need this hold. We need this propulsion gap to hold. Think of it like an army pushing forward. This is the front line. If the opposing army overtakes, you fall back. There's your second trench. Yeah, so we'll start fighting at the second trench if the first trench fails. And so on and so forth. And then you get a news event, which is basically shelling, which goes over the top of the trenches and just blows everybody to pieces. But hey, we've got no news, so we're all right. Frank, out of DAX with one position, stop loss, break even, TP at 14,693.47. 14,693.47. So they just missed you, basically. Well, it depends on your broker, but on my broker, they missed you. They went to 14,695. So they missed you by 1.5 pips. They'll get you this time. I'm not sure about those electrolyte tablets. It's like when someone makes you a squash and like they put the tiniest bit of squash in the bottom and you go, is there any taste in it? No, I can just about taste it. It's slightly better the taste than water, basically. So my NASDAQ trade from yesterday is still going. Obviously, we don't get much movement on the NAS, but same will be playing out. High rejection. But you can see, obviously, with the NASDAQ, this is why, you know, when we were talking in the New York session yesterday, and I was saying we were testing the DAX strategy in the afternoon to see what happens. This is why you don't trade the NASDAQ in the morning, you trade the DAX in the morning, because the NASDAQ does that. And the DAX obviously does that. But in the afternoon, the NASDAQ will do that, and the DAX will do sort of that, maybe. So this is why we trade different instruments in different sessions. So see if we get that pop out the lows. No, they're buying the lows up. Moment. Got another 3 minutes on this candle. Sellers didn't have enough to get through on that run anyway. Again, there's a possibility of going into a rotation for a while down here. If you had a trade set up and there was high impact news event, would you wait and take the trade after the news or before? It depends what I think the news is going to do. A high impact news event, basically, there's two scenarios. If, for example, we had high impact news in 7 minutes, I wouldn't touch this. In fact, what I would do is I would drag all of these stops down here somewhere, move them all down, because one of two things is going to happen. That news is either going to go against me or it's going to go with me. If it's going to go against me, my break-even stops are going to get me out with profit, or whatever stops I've got are going to get me out with whatever it gets me out with. If it's going to go with me, I'm going to make a fortune. I'm not going to limit my fortune. I'm going to let my fortune be what the market gives me. Yeah. If it wants to do that on a high impact news event, I'm not going to put a TP. If I get in on there, I'm not going to put a TP there. So it's entirely up to you. So many people contact me all the time saying, why don't you put a news filter in your EA? Because news is what makes a lot of the money. You look at your back testing and you look at the biggest wins you get. They're news events. If you're not using a TP, obviously, if you're using a trailing stop, the biggest winners you will have, the biggest days you will have will be the days when there's news. Our job as traders is to use market movement and volatility to make money. Why on earth, and this has always baffled me, why on earth would you say it's going to be a massive move today, I'm not going to trade? Why? That's the day that you've got the most chance of making your money. I've paid my mortgage off for 3 months in one trade on a news event. Why would you not do it? So if I see a trade set up, take it. You've got a 50-50 chance of that trade working out, always. The market on news will either do that or it will do that. Which it would do, you have no clue. And it doesn't matter, because if you have a long on with a stop there and you don't have a TP on it, you're either going to lose. Your job is to put risk in the market. So if you want to risk $500 on that, do it. Don't limit that. Yeah. News is what moves the market. We're waiting at the moment. Look at the euro US dollar and the pound US dollar. We're expecting, based on all the news events last week, for the US dollar to strengthen. It had a massive weakening off of PMI figures of all things. We had awesome unemployment. We've got everything going the right way. What we had was a negative move on the US dollar. We're waiting for the US dollar to power up. I'm positioned for a long move on the US dollar. I need a catalyst. The thing that's going to move this thing is going to be Powell opening his mouth and going, I don't know what they're talking about, a 0.25%. We're going 0.5%. Pretty 90% sure that's what's going to happen. That thing's going to go like that, like a rocket. If we're told we're doing 0.5% this afternoon, this thing's going to pump. Or we're going to wait for the CPI figures. If the CPI figures come out massively higher than expected, this thing's going to pump, because it means inflation is going up and interest rates are going to need another 0.25% to 0.5%, which we're expecting, probably more 0.5%. If inflation's the opposite way, it's going to go like that and I'm going to get stopped out. But this thing is sitting here now waiting for Powell and CPI. This is why you see accumulations and why you see sharp moves and then slow moves. Profit takes, push, profit take. And this is what RSI does, yeah? RSI tells you when there's been a strong move. After a strong move comes a profit take most of the time. Yeah. So, but the profit take move is usually after a news event. So don't limit your trading around news. And these prop firms out there that say you can't trade 1 minute, but you can't have any open positions 1 minute before or 1 minute after news. Why? There's nobody running a prop firm now that is an experienced trader that is not trading news, because that's what makes the market move. And the market movement is what we need to make money. Yeah. Non-farm payroll. Or unemployment figures, as I call it. Everyone else calls it non-farm payroll, but it's basically moving on unemployment figures. That's the thing that actually moves it. It just happens that there's a news event called non-farm payroll at the same time. But if you traded non-farm payroll, yeah, here, so that was the low. Well, that was the low before non-farm payroll. That was the high before non-farm payroll, right? If you, at any point in here, placed a long and a short order at the same time with a stop there and a stop there and no TP, you would still be in this trade. You can't tell me that is a bad thing to do. I know someone on Friday that made nearly $100,000 on that move. And he did nothing. It's my mate who used to work in a bank. He runs his own desk basically now. And he just scalps. And this is where he makes his money. There's a program on TV. I can't remember the name of it. It's to do with the UK. It's basically a series like Suits type thing, like Billions, but it's in the UK, based in banks in the UK. And there's a really good scene in that where the woman, the main character in it, she trades non-farm payroll. And you can see her watching her P&L going up. That's what they do. They trade this stuff because they have the power to move it and they have the power to be on board it. Yeah. So just think if you were in a bank and you saw that, and as it came back down to here, you had the power to press a button to make that happen. That's how they do it. That's how they make their money. They also make lots of money accumulating books ready to move. And this is what the opening range breakout is doing. This strategy, the whole purpose of this strategy is to trade how the banks trade. They accumulate a book. When they have a positive or a negative bias that it will make them profit, they move the market. Then they exit and pull back. Yeah, same as you and I do. I'm short. When I exit, when I press the close button on my trades, the platform is executing a buy order. So I've hit a sell button to get in short. When I exit, it creates a buy order because to get out of my position, there's got to be some bloke on the other side that wants to sell to me. Otherwise, I can't get out. Industry, that's it, Seymour. Series called Industry. I'll tell you what, let's have a look, see if we can find it. I'm never going to find it. No. It's a really good, you should watch it. Here we go. This is the one. I don't want to get done for copyright on it, but basically, look, she's looking at her watch, look, her clock, 13:28, 2 minutes before NFP is released. And then she gets to her desk, look, as non-farm payroll is unfolding. Unemployment rate. See, she doesn't call it non-farm payroll. Why? Because the banks don't call it non-farm payroll. The thing that moves it is unemployment rate, not non-farm payroll. Just happens that they come out the same day. The leading indicator that drives this move is the unemployment figures for the US. 15 seconds to go. She's putting her orders in, look, buying, selling. Doesn't matter which way this goes now, she's going to make money. This is exactly what the banks do. This is what we do. It's what we're doing right now this morning. Pound US dollar she's getting on. And this is typical, isn't it? Look, she goes massively into profit, doesn't take it. Or massively into loss. I can't remember which way it is. Yeah, massively into profit, look. Intense music plays. Sell, get out. 30k, 35k. It's all going to reverse. First move's always wrong. False breakout. Typical non-farm payroll move. Oh dear, she's dead. Anyway, she bites her tongue in a minute and bleeds everywhere, which is hideous. So I'm not going to play that bit. But that's basically what you're doing now, right now. Quick question. Let's say my bias is bullish and I missed the 15-minute reversal EA entry. How can I participate in it using an EA? So if you're using the market reversal alert EA, come on guys, let's push this down a bit more, please. How many TPs have I got that one? I'm not going to take. I'm going to go for the lows on both of these. So if you've missed the trade on 15 minutes, so if you've missed that, for example, and you want to use the EA, there's not really a lot you can do. So what I do in this instance is I basically take a manual trade. So what I do is I open up the VPS. And come on, VPS. And what I do basically is I look at what the next trade will be. So I basically open up the pair, put the market reverse alert EA on there, and just let it and say I want to take shorts or whatever, and I tell it to start trading. What I do is basically look at what the next long or short trade will be, which is displayed on the panel. You can't see this because this is on a high definition display, and you can't see the text properly. But so that is a 0.97 long and a 1.38 short. So let's say we're going short on this particular pair. I would then just go and manually take a 1.38 short. Yeah, hit the sell. So basically I'm trading as if the EA had taken that trade. Then I let the EA run. So if it pushes against me, the EA will take a second position, quite close. And that's exactly what it did on the Euro US dollar look. So I missed the entry yesterday on Euro US dollar. So I took that trade there. The EA then got me in there. So you run the risk of having a double exposure, which is fine if it works. If it doesn't, you've got double exposure. And as long as you're aware of that and you're willing to take it, you can. The other thing you can do, obviously, as you've said, is you could jump up a time frame. You could go up to the M30 time frame and let it take the reversal there, because obviously M5 triggers before M15, which triggers before M30, which triggers before hourly, which triggers before 4 hourly. And obviously, the lower the time frame, the faster you're going to get in on the reversal. But obviously, the more dangerous the reversal is, because the more chop you're experiencing and the more reversal alerts you're going to get. So it's up to you which you use. But yeah, flicking up one time frame has the same impact. So what you could do is flick up one time frame to M30. When the order's triggered, then flick back to M15. And the EA will then start to monitor M15 for reversals for you. But there's nothing you can do. The reverse alerts EA is designed to get you in on a reverse alert. If the reverse alert has already happened, it obviously can't do that. The same as an opening range breakout, EA is designed to get you in on opening range breakouts. If the opening range breakouts happened, it can't get you in. So not a lot you can do. Pull it back. So that propulsion gap, buyers are winning out down here. So let's see if we can get some selling action in here. Highly likely to get stopped out on these, unfortunately, but Euro's pushing at the minute. No, it's not. US dollar's weak at the minute. Euro's doing nothing much today. The only RSI is still Euro US dollar on the 4. So got a nice end pattern reversal going in, potentially, but these wicks, a lot of rejection at the lows. Not very clean, is it? But stopped out on the DAX. So unfortunate, but so basically all the profit I got on that one was that, which is a shame. So we see if we can have a better move this afternoon. Obviously, if this now So that's your high, there's your low of the session. So the EA is still going to get me in. If we push up into this area here, my pending orders are going to trigger again at the levels. So if we now do a pullback drop from here, I will get back in again. And obviously, if we do get a pullback drop, I would look for new lows to be put in. So hopefully get the second bite of the cherry. But we'll see. Net for the day is plus 0.5%. Oh, what a shame. You made money, Diamond. Good job. Better job than me. I was really I was anticipating taking it down there. I should have done. That would have brought me back to break even-ish, but I'm trying to let it go, basically, because I want to test this out. I've got so many variations of this this breakout, this new 3-level breakout. The other EAs as well all made loss this morning. That one made loss, max loss. Let's see how they get on this afternoon. This is the thing, this strategy, as we've seen, you have losing morning, and then you have a huge afternoon, or you have a winning morning and a winning afternoon, even better. But I'm going to do more testing today. So what I want to do is get 3 really different set files together, because the set files I'm running at the moment are a little bit too similar on here. So what I really want is one running M5 only, one running M15 only, and I want one running 3 different levels. And I ideally want to be running 2 versions of each, one with a tight and one with a loose trailer. So what I think I'm going to do is, in a similar way to I'm using this one, I'm going to use 2 entries. One entry using a fixed pip, one entry using a percentage of the opening range as a stop. So I get into 2 trades, and then I'll make sure that the fixed pip is fairly common, which is somewhere between 30 to 40 on an opening range. So the idea being I can get 2 positions on and then take one off and let one run. That's what I want to really focus on. But we'll see. Afternoon, morning even, pot goiter. Just finishing up. You've missed it all. So everything bias-wise is still the same. Pretty much in the same position I was yesterday morning, wasn't I? And then yesterday afternoon, killed it. Oil is back in profit. So oil having a little bit of a push. New Zealand dollar CAD still going nowhere. Nothing's going anywhere at the moment. It's a nightmare. NASDAQ obviously is starting to push a little. NASDAQ, we've got this huge propulsion gap from yesterday. So, again, same thing. Are we going to challenge the highs or the lows of the day? We'll find out this afternoon. Stay tuned. Find out this afternoon. Pound US dollar, flip-flop. Pound New Zealand, not going anywhere. Euro US dollar, as we know, is not going anywhere. Nothing's going anywhere. Aussie New Zealand, that's going somewhere. Close to TP on that. It's only a little one though. And Aussie dollar CAD, that is moving as well. So Aussie dollar CAD, so we got that lower high at the moment, and obviously I'm challenging this level at ADR today. That's why I'm getting out of one of the positions anyway. So that's on the move, but we still haven't broken the Asian lows yet. Nothing's gone anywhere. Look, it's just another one of those waiting sessions. I'm short Aussie dollar CAD. Yeah, I'm short Aussie dollar CAD. CAD news in 30 minutes. Yeah, so the news we've got obviously is the talking heads at 10:10. So this morning, Bailey's. Hang on, that creeped in. Look, didn't see that. Bailey's just creeped in there. So Bailey's talking this morning. So we've got potential US pounds as well now. That's sneaky. He wasn't there a minute ago. You saw that. I refreshed that. Good job I did. No news this morning. So big talking heads this morning at 10:10. So that is potentially where we're going to get some volatility coming in this morning. Canadian dollar and oil, pound, and obviously yen. You know, they don't pay any attention to him because he never talks about interest rates. They don't talk about anything. The Japanese, they literally are, I'd probably say, behind the Swiss, they are the tightest lipped country about financial movements. The Swiss don't let us know anything. You know, we know that. Look at what happened to the Swiss when, you know, the Swiss are another one where they never change their interest rates. They just don't do it. And then they went, actually, we're going to go up 0.5%. Nobody in the entire marketplace was expecting it at all. And we got that like 206. So bear in mind the ADR on this is 50. We got a 260 pip move in an hour. Yeah. This is why we pay attention to talking heads and interest rates, because that's what moves it. And again, going back to that thing about news, yeah, I've got positions on here on CAD. I've got positions on the pound. So, you know, a lot of people are like, oh, I'm going to get out of my positions ahead of the news. Why? Don't get out of them ahead of the news. This thing here right now has got the ability to make me 2,000 to 3,000 this afternoon. Why would I get out of it? Or in the next half an hour? Why would I get out of it? Worst case scenario, so we're going to stop out and I'm going to lose money. But it's not in my control, is it? So yeah, so I basically I'm just looking for on the Aussie CAD. You're talking about Aussie CAD, Kenny. So just obviously, market structure is bullish until it's bearish. So if we are going to remain bullish, this low won't get invalidated, and we will pull back anywhere down to a double bottom, and then push back up and make a new high or challenge that high. So I want to be out at ADR basically. I've got another position on down here, so I will make a judgment call when we get down there, if we get down there with those two positions, as to whether or not I close that position or keep it on. But obviously don't forget Aussie CAD is range bound. So the reason I'm short on this is because retail's all long. But it's range bound at the moment. So I'm not getting greedy on it. I'm not going to try and take those lows out, but it could do very easily. But news. So again, on a fast, hard move, when we get down to ADR, that's when we start to run out of steam. So that's where I get out. I won't get out of all of it. I'll leave some of it on. We'll see. So 1% loss this morning on the ORBs. Could have got that back if I'd have closed it manually, but I'm not. Going to watch the video, Pot Gaito. Which one's that? What video? Oh, you're talking about the industry video? Look. Non-farm payroll. Sell. Whoopsie. Oh, that hurts. Ow. That's what non-farm payroll can do to you. Anyway, what's that bit? Where are you going to find $140,000? Anyway, HBO Max, well worth watching. Really good series. That and Billions. HBO do all the trading stuff. Billions, best thing ever. Billions. Bobby Axelrod. Right, I'm going to leave it there. So just managing these positions this morning. I will obviously be aware of the news, the talking heads this morning, and Powell. I'll be back on at 2:20 ahead of the New York session, and we'll obviously trade NAS. So just be aware of all of this morning. It may do absolutely nothing. It is just talking heads. They're talking at the same thing that Powell is talking at, but you know, when you get all the bankers together in one place, there is a lot of press there. So they use these big events where they're all attending at the same time to release information. So we need to be aware of that, but may do absolutely nothing. And if it does absolutely nothing, it clears the decks for the New York session to be a little bit more lively, doesn't it? So we'll see. DAX, again, prime example of a propulsion move. Big push up. Sellers try to slam into it. Buyers bought up where they bought before. Rejection. So if we push up into this area here, and we are doing a pullback move, then I will be getting in short again. Either way, I'll be getting in either long or short. So if we break these highs, again, think about what's happening now. Where we are on the daily. Whoops, wrong one. The daily. So at the moment, we're putting in an inside bar, aren't we? So for us, if you look at how many times you get an inside bar, yeah, there's one there. There's one there. There's one there. There's one there. But if you look at most days, that's a high. So if you look at most days, so out of all of these days we're looking at here, which goes back to the beginning of December, yeah, there's 1, 2, 3, 4 inside bars. Inside bars are rarer than outside bars, yeah, like that one, or trend bars, where we put in a new high and a new low. Yeah, so that's trend bar, that's trending up, higher high, higher low. So when you're looking at the price action where we are now, right now, only 4 days out of all of this lot, we've had an inside bar. So the odds of this doing this are rare. So if it's going to do this, something today, what's it going to do? It's got to come and challenge one of those. So we're going to need a strong move, aren't we? So where we are right now, if this breaks back up into here, I still want to be trying to get on a break, because it's unlikely, less likely, I should say, that we're going to stay like this. Most of the time, we're at least challenging a high or a low, aren't we? Yeah. On an inside bar, we challenged that low, and then we flew to the upside. So that's the annoying thing, is if you can't get your order triggered back on and then it goes without you, but them's the breaks. Going to watch the video after the live, yeah. Oh, watch this video. Oh, okay, right, okay. Okay, well, I'll go now so pot guys can watch the replay. But I'll be back at 2:20. Just keep an eye on everything today. Obviously, we got news, talking head news. So see if I can get some profit basically in the bank off of this lot. Yeah, I will see you this afternoon at 2:20, and we'll have another look at what's happened and see where we go from there. All right. So hopefully we'll get some ADR hits. If we get some news, we'll get some ADR hits, we'll get some RSI extensions. We can look at those for potential entries this afternoon, but a bit flat at the moment, so not a lot we can do. All right, have a good morning. Hopefully it's profitable, and hopefully see you this afternoon. Have a good one.